Hey everyone, and welcome to the channel. Ever dreamed of financial freedom, building wealth, or just making your money work harder for you? Investing can be a powerful tool to achieve those goals, and it's not as complicated as you might think. In this video, we're breaking down the basics of investing, focusing on the stock market, and giving you a roadmap to get started, even if you're a complete beginner. Let's start with the fundamentals. What exactly is the stock market? Imagine a company needs money to grow. They can sell little pieces of ownership in their company, called shares or stocks. When you buy a stock, you become a part owner of that company. If the company does well, the value of your shares can go up, and you can potentially earn money through dividends, which are like little payouts the company gives to its shareholders. The stock market is where these shares are bought and sold. Now, there are different ways to invest. You can buy individual stocks, which can be exciting but also risky. You can invest in bonds, which are like loans you give to a company or the government. But for beginners, two investment vehicles often stand out: exchange-traded funds, ETFs, and index funds. An index fund is like a basket of different stocks that tracks a specific market index. A market index is a measure of the overall performance of a particular market segment, like the S&P 500, which tracks the 500 largest U.S. companies. By investing in an index fund, you're automatically diversifying your investments across many different companies, reducing your risk. An ETF is similar to an index fund in that it also holds a basket of assets. However, ETFs trade on stock exchanges like individual stocks, giving you more flexibility. They often have low expense ratios, which means you pay less in fees. Many ETFs track market indexes, just like index funds. Investing is a long-term game. The key is to have a strategy and stick to it. One popular strategy is dollar-cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of market fluctuations. This helps you buy low and sell high over time. Another crucial concept is compound interest, earning interest on your initial investment and on the accumulated interest. It's like a snowball effect, and it's incredibly powerful over the long term. So, how do you actually start investing? You'll need to open a brokerage account. This is like a bank account specifically for investing. There are many online brokers to choose from, each with different fees and features. Do some research and find one that suits your needs. Once you've opened an account, you can start buying ETFs or index funds. Investing always involves some risk. The stock market can go up and down. That's why diversification is so important. Don't put all your eggs in one basket. Invest in a mix of different asset classes, like stocks, bonds, and even real estate. This will help protect your portfolio from market downturns. Before we wrap up, let's talk about some common investing mistakes to avoid. Don't try to time the market. No one can predict where the market is going in the short term. Don't let emotions drive your investment decisions. Be patient and stick to your long-term strategy. And don't be afraid to ask for help from a qualified financial advisor. Investing can be a powerful tool for building wealth and achieving your financial goals. It's not as complicated as it seems, especially if you start with the basics and focus on long-term strategies. Now that you have a better understanding of the stock market, index funds, and ETFs, it's time to take action. Do your research, open a brokerage account, and start investing today. Don't forget to like this video, subscribe for more finance tips, and let me know in the comments if you have any questions. Thanks for watching.